The dividends were declared and received in the current year from an unrelated taxable domestic corporation in which Kell owned less than 1% of the invested stock. Kell had no portfolio indebtedness in this current year. Kell should claim a dividend received deduction of. So here is some data given for the Kell Corporation. Okay, the income statement is given, and it is given that the company is receiving some dividend from an investee which has the ownership of 1%. So how much DRD will be applicable in this case? How much DRD will be applicable in this case?
50%,
Yes, correct, 50%. So how much dividend they are receiving?
3,000,
Okay, so how much DRD will be applicable?
1,500.
Yes, correct. So correct answer will be A. Okay, next question. After a corporation terminate its S corporation election, what is the minimum number of years that the corporation must wait before a new valid S corporation election is effective? So when a S corporation status is terminated, to re-elect this S corporation status, we have to wait for how many years?
5 years?
Yes, correct. We have to wait for 5 years to re-elect the status. Next question is Bowles Corporation, an accrual basis calendar year S corporation, has been an S corporation since its inception and is not subject to any UNICAP rule, which is Uniform Capitalization Rule. In year one, Bowles recorded the following: their gross receipt, dividend income, supplies expense, utilities expenses. Uh, on Bowles Year 1 is corporation form schedule case, shareholder share of income, credit and deduction. What amount should be separately stated from business income? So you have to tell what should be the separately stated items. If this all the income or expenses flows to individual return, then which will be ordinary and which will be separately stated?
Dividend income will be separately stated.
Yes. And rest of these two expenses are ordinary expenses, so it will be directly reduced from your gross receipt to get the ordinary income. But dividend received will be considered as your separately stated items. So correct answer will be A. Okay. Next question is, a corporation penalty for underpaying federal estimated taxes is. So if they are paying some penalty, then that penalty will be deductible or not deductible or partially deductible.
Non-deductible?
Yes, correct. Penalty will be not deductible. Okay, so if you have any fines and penalties that a corporation is paying, then these penalties will not be deductible for the tax purposes. Okay, next question. Pierce Corporation and accrual basis calendar year C Corporation had the following year 1 receipt. Year 2 advance rental payment for a lease ending in year 3. Lease cancellation payment for from a 5-year lease tenant. Pierce had no restriction on the advance rental payment and renders no services in connection with the rental income. So, what amount of gross income should payers report it on its year one tax return?
3 lakh 50.
3,50,000, yes. So rental income will include your advance payment and lease cancellation payment received. Okay, correct answer will be D. Next question. HDF, a calendar year corporation, begin business in year one. HDF made a valid S corporation election on December 1, year 2. Assuming the eligibility requirement for S corporation status continue to meet throughout the year 3. Which of the following date the S corporation status will become effective? So they has made election on December 1.
So was the option like C and D? January 1, year 3.
Yes, correct. Or if it is before March 15, year 2, then it will be applicable for.
No, no, come again.
Yes.
The other example you're talking about?
Sorry, your voice is breaking.
No, I didn't get you the second question.
Okay.
Yeah,
So
hmm.
if I change this date from December 1st to March 1st, then what should be your answer now?
December 1st, year 3.
No. If you do the election before March 15 of any year, then for that year it will become the effective status will become effective. Okay. So if you
Okay.
are doing the election before March 15, then for the current year the election status will become effective. But if you are doing after March 15, then it will be effective from the January 1 of next year. Okay. So if you have date less than March 15, then it will be January 1 of year 2. But if it is after March 15, then it will be applicable from the next year.
Next year. Okay. Got it.
Okay. Got it? Okay. Next question. That a C corporation distributes software over the internet and has had average revenue in excess of 35 million per year for the past 3 years. To purchase software, customers key in their credit card number to secure website and receive a password that allow the customer to immediately download the software. As a result, the DART does not record account receivable or inventory on its books. Which of the following is correct? So he has their average revenue in excess of 35 million from the past 3 years. That means it will be a large corporation. So which method they should use for accounting?
Accrual method?
Yes, correct. So if you have gross receipt above 31 million, then you have to use the accrual method. Okay. Next question. Which of the following shareholder is any ineligible to own the stock of an S corporation?
Option C instead of disease.
But estate is an eligible shareholder. It is
Yes,
not
sir.
correct.
Trust is also eligible. Then domestic C corporation.
Yes, correct. So C corporation is not eligible to be a part of S corporation. So correct answer will be C corporation. Okay, next question. John Budd is the sole shareholder of REL Corporation, an accrual basis taxpayer engaged in wholesaling operations. REL's retained earnings at January 1, year 1 amounted to be 1 million. For the year ended, the book income before federal income tax was $300,000. Included in this computation of $300,000 were the following. So you have to tell then on December 1st, REL received advance rental of 27,000 from a tenant for a 3-year lease commencing on January 1, year 2 to cover the year 2, 3 and 4. In conformity with GAAP, REL did not include any part of rental income in income statement. You have to tell what portion of dividend revenue should be included in year 1 taxable income. So you have to tell that since they are not asking anything about rental part, that means this is invalid. You only have to tell what should be the dividend portion that will be included in the taxable income. So dividend they are receiving $1,000. Yes, only this is the dividend they are receiving. They owns 500 share in a corporation where total 1 million 1 million shares are outstanding. So out of 1 million, they are owning the 500 shares. So calculate the percentage first, then please tell how much dividend it will be included.
$50.
How much?
50%.
Yes, 50%. So the ownership here is 500 divided by total number of outstanding shares. Okay. So since this is less than 20%, that means you will get the 50% of DRD here. So out of $1,000, you will get the 50% of DRD. That means only $500 will be taxable. Okay. Is this clear?
Yes.
Okay, next question. The shareholders of a newly formed corporation are considering electing S corporation status, but one voting shareholder object to elect the status. So, which of the following is correct regarding this situation?
Option C,
They are il- they are doing the election to elect the status. So, to elect the S corporation status, you require how much of,
50%, 50,
and for termination?
100%.
No, wrong.
No, for
So,
termination it's 50%,
yes. And
and
for
for
electing, you need to have the 100% of consent of shareholders. So,
okay.
even a single shareholder can block the ownership percentage. Okay. But for
Hmm.
termination, you require the majority of voting right. That means more than 50% will be okay. Okay. So, correct answer will be
D.
B. Okay. Next question. Which of the following costs are expensable or amortizable organizational expenditure? So, which cost should be expensable or amortizable? Organizational expenditure. That means the expenditure you are incurring to form an organization. Printing cost, commissions, professional fees, legal fees.
Commission
No.
or legal fees out of them because stock
Yes, legal fees.
legal fees, yeah. Because the stock one which will get capitalized, it is pertains to stock.
So legal fees is the organizational expenditure. Other will be considered as your selling expenses like printing cost, commissions. These are basically costs to sell your stock. Whereas legal cost is related to your organizational expenditures. So it will be expensable as well as amortizable. So the rule say that you can expense up to $5,000, okay, in first year, and then rest of the expense you can amortize for 180 months. Next question. The 50 investors who recently created an corporation held their first shareholder meeting to determine the corporation's tax status. Under the federal tax law, the corporation may elect as corporation status if the election has at the minimum approval of.
All the shareholders.
Yes, correct. So 100% consent is required. Okay, next question. For which of the following entities is the owner's basis increased by owner share of profit and decreased by owner share of losses, but not affected by the entity's bank loan increases or decreases?
Partnership,
Which one?
partnership.
But under partnership, your basis is affected by the liabilities of a company. Okay. Since for C corporation, you do not have like your basis is not affected by the profit and losses the company is earning. Next, for limited liability company, it is also a C corporation by default. Partnership, for partnership, your basis is affected by the liabilities of a partnership. So it is not the correct answer. But in case of S corporation, your basis will be increased by the profit the company is earning and decreased by the losses. But if the company owes any liabilities, it will not affect your basis. It will only affected by the any loans if a shareholder is giving to the S corporation. Okay, is it clear?
Yes.
Okay, next question. Please solve it. These are some interest income. You need to tell what amount the corporation report as taxable interest income on 1120.
The 14,000.
Okay, you have added all the interest, but is the state or local interest, local in bonds interest is taxable or not taxable?
Municipal bond, I think it is not taxable, but I'm not
Yes.
sure it is.
Yes, if you have any s- state or local bond, it will not be taxable. It
Then
means
it's 9,000.
yes, correct. So it will be 9,000. Okay. Okay, then solve this question. Melanie is the sole shareholder of Machine Incorporation and S Corporation. Her basis was $43,400 at the end of year 4. That means it is the beginning basis for year 5. In year 5, the corporation has a loss of 19,000 and distribution of 38,000 and guaranteed 11,000 of machines corporate debt. What is the total stock and debt basis? Are you solving this question?
Yes, ma'am, trying.
Okay.
35 400.
Okay, and other? Shravani, has you calculated it?
Ma'am, will it be option A?
Okay. Okay, then let's calculate. So you have a beginning basis of $43,400. Okay, I'm writing here. So you have a beginning basis of $43,400. Then you have losses from the S corporation, so loss of $19,000. So you will get your ending basis of, okay, let me calculate, 24,400. Okay, so now you have a distribution of 38,000. So this 38,000 distribution will reduce your stock basis up to zero. It means it will first reduce your stock basis and excess of distribution will be considered as as a capital gain for you. Okay. Next, talking about the debt basis. That means your stock basis now becomes zero. Okay. Talking about the debt basis, so it will be increased if you have given any loan to the S corporation. Okay. But if as a shareholder you are personally guaranteeing some loan of a corporation, means you are guaranteeing some debt of a corporation, then it will not increase your debt basis unless or until you have paid it, or you have given any loan to the shareholder. Okay, otherwise it will not increase your debt basis. So that means your stock basis here was zero and now debt basis is also zero. So total of these will become zero. Any doubt? So the
No,
right
ma'am.
answer will be A. So those who have calculated this answer, is it clear how it is zero?
Yes, yes.
Yes, ma'am.
Okay, next question. Which of the following credit is a combination of several tax credit to provide a uniform rule for current and carry back carryover year? So combination of several tax credit. This is the main tagline to identify this credit. So which is the credit? Minimum tax credit, foreign tax work opportunity, tax credit, or general business credit?
General business credit.
D option.
Yes, correct. Option number D. General business credit. Okay, next question. So here the question is same, but only these difference is given that loan, Melanie has itself given the loan directly to the machine corporation. Please calculate the stock basis and debt basis and total of this.
Ma'am, option C.
Okay. And Dhanashri, what's your answer?
Option B.
Okay. Okay, then let's calculate. So, what is your stock basis? Uh, what is your stock basis you are getting, like after calculating?
24,400.
Okay. And debt basis, how much you have calculated?
Ma'am, 11,000, which is low.
Okay. Okay, let's calculate. So, first talking about stock basis. So, you
Ma'am, so
have a,
stock basis would be zero, right?
yes, and debt basis.
That would be loaned 11,000.
Okay. Okay, let's calculate. So you have a beginning stock basis of 43,400 and you have a debt basis of, so here this loan will increase your debt basis because it is given by shareholder to a S corporation. Okay, now you have a loss of, sorry, you have a distribution of 38,000. Sorry, you have a loss of 19,000 and you have a distribution of 38,000. So if you have here distribution as well as loss, so first of all we will decrease our distribution. It will give you your ending stock basis of 5400 dollars. Okay, now this loss will be subject to certain limitation, as we discussed that it will reduce your stock basis first. It will reduce your stock basis first to zero, then it will reduce your depth basis. So that means your stock basis now decreased to zero by this $19,000 loss, and then this loss will be deducted from your depth basis. So that means this loss will be deducted first from 5400, then excess of loss will be deducted from your 11,000. So it will also decrease your depth basis to zero, and then excess of loss you can carry forward to the next year. So how much loss is left? 16,400 you have subtracted and it is 19,000. So you are left with $2,600 of loss that will be carry forward. That means your stock basis and depth basis both are zero in this case also. So first of all, you will decrease your distribution. Then after decreasing your distribution, you have certain loss. This loss will be subject to the stock basis and depth basis limitation. It means it will decrease your stock basis first, then your depth basis. And if you have excess of loss, you need to carry forward to the next year. So is it clear or any doubt?
Ma'am, from what amount did we decrease our stock basis and debt basis?
From what this $19,000 of loss, you first have to decrease from your stock basis. Okay,
Okay, ma'am,
since
got it.
you have a stock basis of 5,400, it means up to 5,400 you can decrease this loss. Then it will be decreases from your debt basis. So you have 11,000 of debt basis, so it will decrease your loss up to 11,000. That means overall you have decreased your loss up to $16,400. Okay. Remember, it will the summation of stock basis and debt basis is called the tax basis. So loss first have to subject to the tax basis limitation. Okay. Under tax basis, you have first stock basis and then debt basis. Okay. Any doubt?
No, ma'am.
Okay. Let's do the next question. Beach Corporation, an accrual basis S corporation, had been an S corporation since its inception. At the beginning of current year, Gold owned 50% of the 100 issued share of Beach stock and had 3,000 tax basis. During the current year, Beach Corporation has $200,000 of income, 4,000 is municipal bond interest, and there is no distribution. What was the tax basis at the year end? So you have to calculate the tax basis at the year end. Beginning basis is given $3,000 or and 50% is the ownership of gold.
C 1,05,000.
B or C?
C C.
Okay. And Shravani, how much you have calculated?
Ma'am, calculating.
Okay. Good.
Ma'am, third option, C.
Okay. Yes, correct. So you have a beginning basis of $3,000. This is tax basis. That means stock plus debt both are given. So this is 3,000. Next, you have a 50% of ownership. That means 50% of your income and losses will be uh, carry forward to your individual return. So 50% of your income from business and 50% of this interest will be added to your tax basis. 100 plus 2,000. So it will give you 105. Okay. So your ending tax basis will be $105,000. Okay. Next question. Tracy, an owner of S Corporation. This is again stock basis question is given. You have a beginning basis. Then you have some adjustment. That means during the year you have contributed some capital. Then you have a net operating loss which was 7,000. Then you received $1,000 of distribution. You need to tell what will be the ending tax basis, ending stock basis.
Ma'am, option A.
Okay. And Dhanashri, have you calculated?
AAE 9,000.
Okay, let's calculate it. So you have a beginning basis of 13,000 and you have made additional contribution of 4,000. So additional contribution will increase your stock basis. Then you have a loss of 7,000 and distribution of 1,000. So first of all, you will decrease your distribution and then you will decrease the losses. So it will give you 13 plus 4,000, 17,000 minus 8,000. It will give you the 9,000 answer. Correct. Okay, next question. So Buster Corporation, Cooper Corporation received the following dividend during the taxable year. Each investment had been owned for previous 5 years. So what is the DRD in this case? So you are a copper corporation and receiving the dividend from these corporations. You need to tell what should be the DRD in this case.
C 9,400.
Okay. And Shavni?
Ma'am, not understanding.
Okay. So you are receiving the DRD dividend, sorry, from these corporation. You need to tell what should be the DRD in this case. So since dividend received deduction is given to the C corporation, That means it is a C corporation. Next thing, it will be given on the stock which should not be debt should not be like in based on depth. Okay, it so that means these will be all be applicable to receive the DRD, and it will depend upon the percentage of ownership you have in that corporation. So if you have less than 20% of ownership, that means 50% of the dividend will be taxable and 50% will be deductible. So this 10,000 and 1,000 will be 50% deductible. 10 plus 11, 11,000, and 50% of this 11,000 will give you $5,500. And next, this $6,000, since you are earning it from a 25% of ownership corporation, that means you can get the 65% of the dividend receipt deduction. That means 65% of your 6,000 and 50% of your 11,000 will be deductible. So if you calculate, it will give you 6,000 of 65 and your 5,500. $9,400. Any doubt or is it clear?
Clear, ma'am.
Okay. So these were questions related to your S corporation and C corporation taxation. In the next class, we will start our next unit. So if you have any doubt up to here, you can ask.
No, ma'am.
And Dhanashri, do you have any doubt in C corporation or S
No,
corporation taxation?
no, Ganesh.
Okay. So have you revised this unit?
Yes,
Okay. And how's your preparation going on, Shravani and Dhanashri?
going good.
Going, ma'am.
Okay. Okay, revise this topic and also practice some MCQs and simulations.
Yeah, sure.
Okay, ma'am.
Okay, thank you for joining. Bye.
Thank
Thanks,
you. Bye
ma'am.
bye.
Bye.